Investors are obsessed with China and the knock-on effect of changes in its growth rate. From the outside, its policy decisions seem opaque and unpredictable. Within the ruling Communist Party, there's a changing of the guard in leadership, which has further added to this uncertainty. We get some insights from Liang Du, Portfolio Manager at Prescient Portfolio Management, who joins us from our Cape Town studio. Hello, Liang.
Hi, Rika.
Liang, one almost wonders where to begin. It's a huge region, just spatially, a huge population. If we could perhaps just start with the issue that we touched on, the leadership transition and what it might mean for growth and the kinds of policies that are likely to emanate. The impression one gets is that they're looking for a smooth transition with very little hiccup policy-wise.
That's absolutely correct, Erica. I think if you look at the way the Chinese do their transitions, the two members in place, so Xi Jinping as well as Li Keqiang, has been in their position for the past 5 years almost, and it was almost even 5 years ago, it was expected that they will come up and become the new leadership. So they'll be taking over the mantle from the current set of leaders going into the new year. In terms of policy plans, if you look at the new Chinese, to the 12th Chinese 5-year plan going forward, I think it's very, very good to see that they're very well aware of the challenges facing China. One of the things they point out is that they definitely want the rebalancing of the economy. They understand the economy cannot go on being this export-driven, heavy construction type of economy. And they're changing that. The focus is going to the consumer and the people. If you think about China's potential, the true potential of China is making sure that the average man on the street in China becomes a lot more wealthy. And I think that's where you see the policy going towards. Now, in order to do that, the government has set out a few initiatives. Starting with a better social security net. So one of the focus they're going to look at is, of course, some form of social security for the general Chinese people, as well as improvements in healthcare for the general Chinese people. The second area they want to look at, given that there's such a massive country and pollution is a real thing in China, is clean energy. In fact, I think no one else in the world is spending as much money on clean energy as China is at the moment, and that's looking to expand even further. And lastly, the third thing that China wants to do is even go up higher in the value chain. So part of the policy is to make sure that IT and technology development, R&D spending are going to go up massively so, as well as the fact that intellectual property protection rights, which are weak in China, are going to be strengthened over the coming 5 years.
Liang, just to ask you the question, and one that's very important for us as a commodity generating, producing country, the China of today is one that's relied heavily on the development of infrastructure. You've obviously gone to China and traveled around the country. Is there a need to continue to urbanize at the rate that we've seen in the last decade?
I think the current rate is definitely going to slow down. And what you're going to see is that it's not going to stop immediately. I think there's this fear that tomorrow China's going to stop building. That's completely not true. China's a massive country and there's a lot more to go. But it's not going to be at the pace that we're seeing currently. Secondly, although the first tier cities, you're talking about your Beijing, your Shanghai, they're massively built up. When you go to the second tier and third tier cities, they're actually still relatively unbuilt. That's going to still have to come. Thirdly, urbanization is going to get, so China has urbanized about 40% of its population. And over the next 25 years, it's likely to see another 20 to 25% of its population urbanize. China has a massive population and there's actually a lack of housing for these people. So as they urbanize, they will continue to spend. But of course, in terms of resource growth and resource consumption, it's likely to slow down, but gradually over the longer term. But I think as a commodity producer such as South Africa, I think we just have to remember that we have India right behind China, who's probably at 10% as developed as China with the same 1.3 odd billion people.
It certainly does bode.
Don't worry too much.
It certainly does bode well, I guess, for resources and the sustained spending in infrastructure. But now if we talk about some of the concerns that have come out of China, some analysts have gone over there, notably some of the hedge fund managers in London, and said that there is a property bubble developing there. Do you have any thoughts on that issue?
I think there are pockets in China that are certainly in a property bubble. There are small areas that are very, very, very expensive. But if you look at the tier 2 or tier 3 cities, property values have not even risen with pace of the income that has risen in those cities and in those provinces. So I think China is a massive, massive place. To say the entire China is in a property bubble is probably untrue. The second thing we have to realize in China, right, is that the property sector is not as leveraged as the rest of the world. There's massive controls even in those tier 1 cities. I'm talking about relatively expensive. A lot of the properties are done using cash, you're talking about 50% deposit downs. You're not talking about 10, 20%. There are restrictions on whether you can buy second or third properties. So even if it is slightly overvalued, there's lacking that leverage effect on the entire economy.
Liang, you've mentioned in terms of the energy mix of China that they use, as I understand it, a fairly balanced portfolio of traditional electricity generation as well as nuclear, and you've mentioned the sustainable energy. But in terms of the power to drive cars, do they source all their oil from the likes of the Middle East and Africa, or do they have sources of their own that they've discovered yet?
I think in the Xinjiang region, they definitely have oil and energy companies that has found oil and massive amounts of natural gas, as well as coal, which drives China's energy need. But having said that, it is getting nowhere close to enough. So China do have to import a lot of oil from the Middle East as well as Africa.
You referred earlier, Liang, to intellectual property rights within China, and I think this is almost the idea one has of China, and perhaps you could dispel some of those myths, if there are any, about foreigners doing business within China and also China coming into other regions and doing business there. So just businesses being afraid of the security of their intellectual property.
I think historically that's been the case, right? You should be afraid because intellectual property was not protected very well in China. I guess when you're back in the day when you're in a communist nation and you shared absolutely everything, and we're talking about real property and not intellectual property, sharing intellectual property seemed like a small step. But I think China has realized now, especially the government, that without intellectual property rights, China cannot be an innovative nation. And for China to be successful, it has to be an innovative nation. So you've seen massive clampdown occurring all over China on intellectual property rights. Courts are getting better, arbitration courts are getting better at protecting property rights in China. And I see that trend to continue.
Liang, just in terms of what ties into property rights and what they call this movement of the Chinese economy up the value curve, from producing very basic products to eventually competing with their Japanese counterparts in automobiles and perhaps the likes of Boeing in the manufacturing of aeroplanes. Is this something that the central government is very conscious of, and what are they doing by way of education and technical skills to make that possible?
Okay, China has a massive education policy and has actually a very, very good schooling system. So we're talking about both primary schools and high schools, as well as universities. As you well know, China graduates something like 100,000 engineers a year. It's an absolutely massive number, and that's set to continue. As you said, the interesting China government really, really helps companies setting up these high-tech things. So what we've seen is that, suppose biotech, which is one of the sectors that they're trying to protect, you can see special economic zones providing biotech companies with very, very cheap funding, very, very cheap loans. They're providing you free land as well as free, almost money for you to construct your laboratories and your factories and your high-tech factories on their places to be deducted off your tax bill later on. So it's a very conducive environment. So if you want to start a high-tech industry somewhere, so what you're seeing is a lot of American PhDs, Chinese PhDs returning back to China and creating products there simply because it's so easy to do so.
So do they have the equivalent of a Silicon Valley in China at the moment?
They do. In fact, there's a region in Beijing that's the equivalent of the Silicon Valley in the USA. And statistics were showing in 2009, 2010, that region are seeing RPOs of about 39 RPOs, 40 RPOs, compared to Silicon Valley, which was seeing about 1 to 5 RPOs over the same period.
Liang, I referred earlier to policy making and outlook there often being opaque to outsiders. What about doing business in China for outsiders? One gets the impression that it's pretty tough and it's pretty different from a Western mindset to get going there. And you can see the big multinationals who've started settling there many years ago. Still, really, it was just a matter of getting their toe in the door and not necessarily flourishing yet.
You're absolutely right. I think the old adage of China, right? Rule number 1, everything is possible. Rule number 2, nothing is easy. And I think that's still the case. I think doing business in China, one really has to understand the Chinese culture. You have to be very, very patient. There's very big relationship components in doing business in Asia. I think Western businesses are very used to getting to a place, getting to the point, sitting down with the decision makers and getting things done. And when you go to China, you can't do that. You have to go there, you have to understand the environment, you have to make the right relationships, you have to set things up slowly, and when people trust you, then everything is possible. But having said that, it's not a terribly difficult place to start up a business. I think they have, the reason why it's so successful, they're growing so fast, is that for people getting there, wanting to start a business, it can be done.
Liang, just in terms of you're setting up a fund there to invest specifically in China, what is the level of financial services that are available to the average person in China? Can they buy mutual funds or unit trust funds in South Africa, in America, around the world, or is it still fairly one-dimensional in terms of what people can buy?
Okay, at the moment it's still fairly one-dimensional. So for the local Chinese people, they are not allowed to take their money offshore and buy offshore funds. So they can only buy local mutual funds, and there's actually a thriving asset management industry. It's a very, very young industry. It's only about perhaps 10 years old in China, but it is there, and they're starting to raise quite a large amount of funds. So it's starting to become more and more professional. But for the average Chinese investor at the moment, they can only invest in China. For institutional investors in China, they can apply for a license to invest overseas. But as speaking to a lot of Chinese financial institutions, what you find, they say that overseas for them means Hong Kong and Japan and Taiwan. They're not even thinking about, they just started to think about America and Europe, and it's going to be a long time before they think about South Africa.